Was a trader who had everything he needed to succeed. He had a laptop, he had an internet connection, he had access to charts, he had watched hundreds of trading videos, he knew what support and resistance were. He knew about liquidity, he knew about order blocks, he knew about fair value gaps, he knew how to identify trends, he knew how to enter trades, and yet, he kept losing. Not because he didn't know enough, but because he couldn't control himself. Every morning he would sit in front of his screen and promise himself the same thing. Today will be different. Today he wouldn't overtrade. Today he wouldn't chase the market. Today he would respect his stop loss. Today he wouldn't revenge trade. Today he would wait for his setup. And for the first 30 minutes, everything would go perfectly. Then the market would move. A candle would suddenly explode upward, and he would feel it, that little voice. You're missing the move. He would enter. The market would pull back. He would panic. He would move his stop loss. The market would move against him again. He would add another position, then another. And eventually, the trade would become so large that he could no longer think clearly. His strategy disappeared. His discipline disappeared. His confidence disappeared. And the trader who started the morning saying, "Today will be different," would finish the day staring at a red number on his screen, again and again and again, until one day, he realized something terrifying. His biggest enemy wasn't the market, it was his own habits. And that realization changed everything. Because if the problem was the market, he would have to find a better strategy. But if the problem was his habits, then he had something much more powerful. He had something he could change. And this is where an ancient Japanese approach to improvement enters the story. An approach built around patience, repetition, self-reflection, craftsmanship, and one simple idea. You don't become a disciplined trader by trying to become disciplined overnight. You become disciplined by changing what you do. One small action at a time. This is the Japanese method for eliminating bad trading habits, and it begins with a concept called Kaizen. Kaizen is often translated as continuous improvement, but its deeper lesson is much more powerful. Improve something small, every single day, not once a month, not when you feel motivated, not after blowing your account, every day. The trader in our story had always tried to change everything at once. He would lose money and create a new trading plan. He would promise to risk less. He would promise to stop revenge trading. He would promise to trade only during certain hours. He would promise to journal. He would promise to stop watching the charts all day. For 3 days, he would follow everything. Then life would happen. A losing trade, morning, a missed opportunity, a sudden market move, and slowly, everything would collapse. The problem wasn't that he didn't want to change. The problem was that he was trying to change his entire identity overnight. Kaizen offered another way. Instead of saying, "I will never revenge trade again," he made the goal smaller. Today, if I lose a trade, I will wait 10 minutes before taking another trade. That's it. One rule, 10 minutes. The next day, he would do it again. And eventually 10 minutes became 20, then 30. Then he discovered something. The urge to revenge trade wasn't permanent. It was a wave. If he didn't act immediately, the wave passed. And this is one of the most important lessons for any trader. You don't have to defeat every emotion. You simply have to stop obeying every emotion. Fear can exist, and you can still follow your plan. Greed can exist, and you can still close your platform. FOMO can exist, and you can still watch the market move without participating. Anger can exist, and you can still walk away. You don't need to become emotionless. You need to become disciplined enough to act correctly while emotions are present. There was another problem. The trader kept making the same mistakes because he never studied his mistakes properly. He simply felt bad about them. And feeling bad isn't the same as learning. This brings us to another Japanese principle. Hansei. Hansei means honest self-reflection, not self-hatred, not punishment, not sitting in front of your trading account saying, "I'm stupid, I'm terrible, I'll never make it." That's not reflection, That's emotional destruction. Hansei is different. What exactly happened? Why did I do it? What was I thinking before I entered? What emotion was present? What did I expect the market to do? What rule did I break? And most importantly, what can I change tomorrow? Imagine the trader loses a trade because he entered from FOMO. Instead of writing, "Bad trade, I need more discipline," he writes, "I saw price move aggressively without me. I felt anxiety because I believed the move would continue without giving me another opportunity. I entered without my confirmation. The trade lost. My mistake was not the loss. My mistake was abandoning my entry criteria because I was afraid of missing the move." That sentence changes everything. Because now the mistake has a name. And once a mistake has a name, it can be attacked. Maybe his rule becomes, "I never enter after an impulsive candle unless my original setup is still valid." Now he has transformed pain into information. That is Hansei. And if you want to eliminate your bad trading habits, you need to stop asking, "Why am I losing?" and start asking, "What exactly did I do that created this loss?" Because the market doesn't need to change. You do. Now imagine the trader opens his journal after 30 trading days. He discovers something shocking. His biggest losses weren't coming from his strategy. They were coming from 5 repeated behaviors. FOMO, revenge trading, overtrading, moving stop losses, and increasing position size after losses. 5 habits, not 50, 5. And suddenly the problem looked manageable. This is another powerful lesson. When your life feels chaotic, identify the repeated behaviors creating the chaos. Don't try to fix everything. Find the patterns. Your trading history is a mirror. Your account history isn't just showing you how much money you made or lost. It's showing you who you become when money is on the line. If you want to know whether you're patient, look at your entries. If you want to know whether you're disciplined, look at your risk. If you want to know whether you're emotional, look at what happens after a loss. If you want to know whether you're greedy, look at what happens after a winning streak. Your chart reveals your character. And that brings us to another Japanese concept, Shokunin. The person who dedicates years to becoming excellent at one craft. Think about a master Japanese craftsman. They don't wake up one morning and decide, "Today I'm going to become a master." They repeat, they refine, they observe, they correct, they repeat again and again and again. The goal isn't to impress people. The goal is to become better at the craft. Trading needs the same mentality. A beginner wants excitement. A professional wants consistency. A beginner asks, "How much can I make today?" A professional asks, "Did I execute my process correctly today?" That's a completely different mindset. Because when your focus is money, every trade becomes emotional. But when your focus is execution, every trade becomes information. Imagine 2 traders. Trader A makes $500, but he broke his rules. He entered late. He doubled his position. He moved his stop loss, and he got lucky. Trader B loses $100, but he followed his plan perfectly. He took the correct setup, risked the correct amount, accepted the loss, and walked away. Who had the better trading day? Most beginners will say Trader A. Professionals understand that Trader B probably had the better day, because Trader B reinforced the habit he needs to survive, and Trader A reinforced the habit that could eventually destroy his account. This is why you must stop judging your trading only by profit and loss. Judge yourself by execution. You can lose money and have a successful trading day. You can make money and have a terrible trading day. That sounds strange, until you understand probability. One trade doesn't determine your ability. One trade is just one event inside a much larger series. Your job isn't to control the outcome. Your job is to control the process. And this is where the Japanese philosophy of craftsmanship becomes incredibly powerful. Try to become the trader who makes thousands of dollars. Become the trader who follows his rules. Then do it again, and again, and again. Eventually, the results become a consequence of the process. Now let's go back to our trader. He had one habit that destroyed him more than anything else: revenge trading. Every time he lost money, he wanted the market to give it back. If he lost $100, he wanted $100 back. If he lost $300, he wanted $300 back. But there was a hidden psychological problem. He wasn't trading anymore. He was fighting. He wasn't looking at the market and asking, is there a high-quality setup? He was asking, how can I get my money back? That question is dangerous, because the market doesn't know you lost money. The market doesn't owe you anything. The market isn't keeping score. Your previous loss has no emotional meaning to the next setup. So he created a new rule. After every losing trade, he had to leave the screen. Not forever, just temporarily. Stand up, drink water, walk, breathe, look away, then return only after his mind had reset. At first, this felt ridiculous. He thought, I'm wasting time. But eventually he discovered something. The trade he wanted to take immediately after a loss was usually not the trade he would have taken calmly. The break created space between emotion and action, and that space became his protection. This is one of the simplest ways to break a habit. Create distance between the trigger and the behavior. Trigger. Pause. Decision. Instead of loss revenge trade, he created loss pause review. Decision. That tiny change began transforming him. Then came FOMO. This one was harder, because FOMO doesn't always feel like fear. Sometimes it feels like opportunity. The market suddenly moves. Everyone appears to be making money. You see a huge candle. You imagine the profits you could have made, and your brain tells you, get in now. But the trader began asking a new question. Was this trade part of my plan before the move happened? If the answer was no, he didn't enter. Even if price continued moving, even if the market went another 100 points, even if he watched someone else post their profits online, he stayed out. At first it hurt, but something strange happened. The more trades he allowed himself to miss, the less afraid he became of missing trades. He discovered that the market creates opportunities every day. The opportunity he missed wasn't the last opportunity, and that is a powerful truth. You don't need to catch every move. You only need to catch the moves that fit your system. A professional trader isn't trying to participate in everything. They're trying to participate in the right things. Then came another destructive habit, moving the stop loss. He used to place a stop loss and then move it when price got close. Sometimes he moved it once, sometimes 3 times. Sometimes he removed it completely. He told himself, the market is just hunting my stop. But deep down, he knew the truth. He wasn't protecting the trade. He was protecting his ego. He didn't want to be wrong, so he created another rule. Once the trade was placed, the stop loss could not be moved farther away. Ever. If the trade hit the stop, the trade was finished. No argument, no negotiation, no emotional speech, just a loss. And slowly, he became comfortable being wrong. That may be one of the greatest upgrades a trader can make. You don't become successful by being right all the time. You become successful by making being wrong affordable. The trader finally understood, a stop loss isn't an insult. It's a boundary. It's the price you agree to pay for being wrong. And once you accept that price before entering, the trade becomes easier to manage. But then he encountered the hardest enemy of all, his identity. For years, he had called himself an undisciplined trader. I'm just emotional. I'm bad at controlling myself. I always ruin good trades. Those statements sounded harmless, but they were programming his behavior. Because when you repeatedly tell yourself who you are, your actions begin trying to prove you right. So he changed the language. He stopped saying, I'm a bad trader. Instead, I'm learning to become a disciplined trader. He stopped saying, I always revenge trade. Instead, I'm training myself to pause after losses. He stopped saying, I have no discipline. Instead, I'm building discipline through repetition. That distinction matters. Your current behavior is not your permanent identity. A bad habit is something you learned, and something learned can be unlearned. Now there is another Japanese concept that fits perfectly here. Shu-Ha-Ri. Describes stages of mastery. Shu means following the rules. Ha means breaking beyond rigid imitation and understanding the principles. Ri means reaching a level where the principles become deeply integrated. For a developing trader, Shu is where you should begin. Follow the rules. Don't try to be a genius. Don't constantly modify your strategy. Don't jump from system to system. Don't change your stop because of fear. Don't enter because of excitement. Follow the process. Beginners often think rules are restrictive. Professionals understand that rules create freedom. A pilot doesn't consider the checklist an enemy. A surgeon doesn't improvise every basic procedure. A professional athlete doesn't train randomly. Structure creates consistency, and consistency creates mastery. So the trader simplified his trading. One strategy, one market, one session, one risk model, one journal, and one objective. Execute correctly. That's all. For the next 90 days, he stopped searching for the perfect strategy. He stopped buying every new indicator. He stopped jumping from one YouTube strategy to another. He stopped trying to predict every market movement. He became boring, and that was exactly what he needed. Because successful trading is often boring. The excitement is usually where the mistakes live. The professional doesn't need every candle to entertain them. They can sit, wait, observe, and do nothing. That ability to do nothing is a skill. Think about how difficult it is. The market is moving. Candles are printing, prices are rising, prices are falling. Your brain wants stimulation, your phone is nearby. Social media is filled with traders posting profits. And yet, you sit there, waiting, because nothing on the chart has earned your money yet. That is discipline, not clicking, not predicting, not forcing. Waiting. The trader eventually created another powerful habit. Before every trading session, he asked himself 3 questions. What is my setup? What is my risk? And what will make me stop trading today?